morning, everyone. It's Wednesday, April 6th. I'm Marv Eisen of Timeless Dollar. And we begin today, as we do every day, at least I do every day, and as I suggest you do every day, is by looking at the economic calendar to see if there are going to be any announcements that are going to tend to move the market. Now today, April 6th, just one or two. Oh, come on. You see this? 2 p.m. FOMC minutes. At FOMC time, the market is going to move volatilely one way or the other, probably both, and I suggest that you not be in the market just before, during, or after 2 p.m. And again, I do this every day. Before the market opens, I look to see the economic calendar. Next thing I do is go over to the morning news. I use CNBC. You can use a paper. You can use your whatever website source you feel comfortable with. Flags are in the red, and by a good deal too. Look, S&P futures down 45. 10-year treasuries. This is interesting. 10-year treasuries up at 2.631%. That's I'm going to show you something about that in a minute. You know, typically the equities market, which is the S&P Emini market, of course, the equities market moves inversely to interest rates. So when interest rates go up, equities tend to be depressed, and vice versa. The last time Chairman Powell spoke, he said that interest rates, they expect to raise interest rates, the Fed that is, 6 times this year at a rate of about, or 25 basis points, that's 0.25% each time. So they intended to raise interest rates 1.5 points, according to Chairman Powell. The market liked that, and look what happened. And I'm going to go to the one-day S&P. Here's the one-day S&P. And right around here is where Chairman Powell said they're going to raise interest rates 0.25 point in 6 individual rate hikes. And the market liked that, and it recovered from its recent low down here at 41.73. And so the market liked that, and it rose, sort of counterintuitive, right? And then it rose up, recovered nicely actually, more than I expected given the war and oil prices and all that, but nevertheless, at any rate, the market rose up from there, and then it started to stall out. Yesterday, you see this red candle? Well, yesterday, what happened was, go over here, yesterday, this is yesterday's E-mini, yesterday at 10 a.m., one of the Fed presidents announced that because of higher than expected inflation, the Fed might raise its rate increases from 0.25% to 0.5%, and that immediately dropped the market. So that was sort of normal, but of course that was an announcement that as traders we didn't know about it. Look, yesterday the market closed the gap nicely for 17 points right at the open, and the gap trade is always a great play because gaps close most of the time. What's most of the time? 75%. So that's a pretty good play. The rest of the day, the market dropped in reaction to that announcement of higher than expected or higher than previously announced interest rates, and the market kept going down. Sort of a trend, right? If you draw a line through the tops, you sort of have a trend down here, right? And the market closed below my trading zone, just below my trading zone, but it traversed the trading zone. So the trading zone is a tool I always use. You should be able to calculate it. It's a difficult calculation. It's based on Taylor's book method. You can get it from my website at timelessdollar.com if you don't have it or you can't calculate it yourself. But importantly, in the early morning, prices did close the gap. And the gap trade is a basic trade that every trader should have in their toolbox. Oh, and I did say something about interest rates because the FOMC announcement is going to impact interest rates, or it's going to be about interest rates, right? And so the market sold off as a result of that, and then overnight it sold off even further. It dropped off my chart here. And so this was the close yesterday at 45.20. And so the market is setting up for a gap trade, but not so fast. When gaps are particularly big, they don't tend to close. So Just keep that in mind. It's just maybe a half an hour before the market opened, and I expect prices to recover to near that level, but I don't expect them to recover from 44.82 where they are now to 45.20. I did say something about interest rates. Going back to the news, here's the 10-year Treasury. Now, 10-year Treasury, here it is. From 2022, you see the rates, they've been solid, they've been stable around 1, 1.25, 1.5. And look, from the beginning of 2022, the first quarter, look where we are now, 26.35. That's where 10-year treasuries are, 26.35. Look how precipitously they've risen. So we can expect more of that. And in fact, in the news, the announcement or the headline is surging interest rates push mortgage demand down more than 40%. So that means that home buying is going to be impacted. Home buying accounts for a good deal of our economy. Why? Not only the house, it's the mortgage, it's the washing machine, dishwasher, refrigerator, all the stuff that goes into a house. So that's going to impact the economy. So things probably are going to get worse before they get better. But remember, whenever you think that you know where the market is going to go, you're already wrong, okay? So we've got to take it day by day, hour by hour. I had a guy call me or email me a few months ago. He said, I don't want to sit in front of my computer screen every day. It's boring. How can I trade the market if I just wanted to make my trade and go about my business for the day? I said, well, then if you're going to do that, my advice to you is don't trade. Don't trade, because trading is like fishing. It's hours and hours of boredom peppered with some moments of excitement. And that's trading. I mean, you got to be observant. You got to sit in front of your screen and watch. I calculate out the trading zone that gives me an inkling of where the market is likely to go, and I watch that. And if I see the market is likely to go in that area, I can trade in that direction, because the odds are more in your favor if you play along with the trend. Anyway, I'm sorry to be a little long-winded today. Trade safely, use a lot of patience, or as I say, you don't even have to trade every day. Just because it's called day trading doesn't mean you have to trade every day, right? Okay, so this is Marv Eisen for Timeless Dollar. If you're looking for some advice, information, or to get the daily trading zone report, check it out on my site, timelessdollar.com. Thanks for watching. I'll see you in my next video.